Hope all is well. Today, guys, we're going to be talking about different types of financial institutions. So why do we need to know about different financial institutions? Well, first of all, we need to know what kind of financial institution we're working at. We need to know what kind of financial institutions we compete against, and what kind of financial institutions perhaps are service providers to us or clients of ours, and sort of where do we all fit in, and what does the landscape look like when we say financial institution? What does that really mean? Because frankly, it can mean lots of things depending on who we are, and we need to know what we mean by it, and we also need to know when we're interacting with others sort of how to ask the right questions about what they mean about it and what they think a financial institution is. So we can obviously be speaking about the same sort of situation. So what are we going to learn? Okay, well, we're going to learn about what is a universal financial services firm, or what we call the universal bank. We're also going to understand where it is that we compete as an asset manager, where our skill sets lie, and what types of services we provide. We're also going to look at who else is in our space, the top 10 asset managers, where do we fit in. And then we're also going to sort of then put that back in the context of one of our earlier modules when we talked about the marketplace, and we said price and allocate capital. We talked about the buy side versus the sell side. We talked about primary markets, secondary markets. Well, we're going to put these sort of who are the market participants and put it in the context of the capital markets. So let's get to it. Okay, so universal bank model. Okay, this is so the universal bank model is a large financial institution that has many lines of businesses. Those lines of businesses have different revenue models, different business models, different ways that they generate revenue for the firm. In terms of ourselves, is this the type of business that we're running? Well, I think the short answer is no, it's not. This is not the type of business that we're running. We are not running investment banking, sales and trading, and asset management. Okay, our business is really just focused down here in the asset management side. But there are firms that we compete with that are universal banks and do participate across the broader spectrum of financial services. So a firm like JP Morgan, a firm like Morgan Stanley, firm like Deutsche Bank, Credit Suisse, these would all be universal banking institutions that would have investment banking, sales and trading, as well as asset management services, where we focus predominantly, if not exclusively, in the asset management space. So we would not compete with the whole firm of these universal banks, but we would compete with the asset management division of these large universal banks. Okay, well, how do these revenue models differentiate from one another? Well, investment banking is a success fee-based business. So what that means is that you don't generate any revenue, you don't get paid until you successfully close a transaction. So it's success-based and it's fee-based. Okay, the fees tend to be very large, but you either close the transaction, get the fee, or you get zero, no fee. So this tends to be a feast or famine business, tends to be a very volatile business. Can be potentially a very rewarding business, but one that has big highs and big lows. Sales and trading, on the other side, is a commission-driven business or a spread-driven business. So you're trading for commissions or spread. Okay, that's the spread we talked about before, the spread of life. Okay, so the difference between the bid and the offer, well, that's how these firms earn a living, is trading for spread. Now, this business tends to be volume driven. So the more trading volume that's out there, the better off the sales and trading business is going to do. This is your classic sell side firm. And that's how that business model works. So first business model, success fees. Second business model, volume-driven commissions or spread. The last business, the asset management business, the business, frankly, that we're in, is done a little bit differently. How do we get paid? Well, we charge fees. Well, our fees are based on a percentage of AUM, or assets under management. So that's how we get paid. So in these universal banks, you have three different revenue models. Again, success fee, big fat fees, sales and trading, commission or spread based on volume, and then the asset management business, the business that we elect to compete in, that is the revenue is generated based on a percentage of AUM, assets under management. If we're looking at these different business models and we say, well, which is the most stable of these three business models, I would argue that the most stable of these three business models is the asset management business, that the asset management business in and of itself is actually quite an attractive business to be in. Why is it attractive? Is because you have this very stable reoccurring revenue stream. So yes, our revenue stream is based on AUM, but AUM doesn't typically change dramatically overnight. It doesn't all of a sudden magically double, and it doesn't all of a sudden magically get cut in half. You might have trends of increasing AUM or trends of decreasing AUM, but it tends to be pretty stable, and as a result, your revenue base tends to be pretty stable. So it's a nice, stable, reoccurring revenue stream, fairly consistent revenue stream. I would argue a relatively low risk business model. Okay, needless to say, it's also a very competitive place to be because it is an attractive business model. Anytime a business model is attractive, well, expect competition. So now if we just focus on the asset management piece, well, who else is out there? Well, there are other firms that compete with us to provide services to investors, to the investing public. Okay, here's a list of the top 10 asset managers. Some of these are pure play asset managers, and some are that universal banking model. So for example, a pure play asset manager, the largest asset manager in the world, is a company called BlackRock. Okay, just to give you some perspective and scale, BlackRock has about $3.5 trillion under management. All of the top 10 asset managers that I've just highlighted have AUM, or assets under management, north of $1 trillion. So now you have this sort of new $1 trillion club. This is a new phenomena over the last several years, really started by BlackRock, who BlackRock, as we know it today, is actually a combination of several asset management firms that merged or were acquired over time. So BlackRock first started out by acquiring the asset management business of Merrill Lynch, MLIM, Merrill Lynch Investment Management. It basically got MLIM, and then Merrill Lynch ended up being a 50% shareholder in BlackRock. Merrill Lynch then became Bank of America, and then BlackRock went out and acquired Barclays Global Investors, BGI. And so now BlackRock today, as you know it, is a combination of legacy BlackRock, Merrill Lynch Asset Management or Investment Management, and then BGI, but Barclays Global Investors, and that formed the first $1 trillion manager, and now they're at about $3.5 trillion. Just to give you some scale or perspective, Invesco is somewhere around the top around 20 top 20 asset managers, somewhere in that ballpark, and that's with about $667 billion, so over $500 million under management. Invesco also has a history of being built by acquisition, acquiring other firms over time to build its product line as well as its asset base or AUM. So to give you a perspective, that's where we focus. Just in the asset management space, we're one of the world's largest asset managers, and sort of closing in on that $1 trillion mark, which is where the world's largest asset managers lie. Okay, well, with all those different market participants, well, how do we play? How do we function within that context? Well, we're certainly on the buy side. So who is the buy side? Well, you're looking at different types of people that could be the buy side. And some of these people that are listed on the buy side could be buying directly, or they could be buying through us as an asset manager, basically managing their money on their behalf. But so where do we fit in this food chain? Well, we're over here as the buy side. Okay, so we could be an investment manager, we could be a mutual fund, we could be a hedge fund, we could be managing money on behalf of folks that are pension plans, central banks, or sovereign wealth. Or on behalf of some corporation. In any event, we're all collectively the buy side, whether we're doing it for these corporations and they're investing through us, or they chose to invest directly. Nonetheless, they're the buy side. These are the people with capital. Okay, and then what happens is there's a bunch of financial intermediaries that we're working with. So those financial intermediaries could be an exchange, a dealer, or this terminology I haven't used yet, IDB, interdealer broker. But some sort of financial intermediary, and then they're putting us into different financial products, whether those be treasuries, government-sponsored enterprises. So that's Fannie Mae and Freddie Mac, those type of institutions, corporate issuers. So this is our Intel, or municipal issuers. So that could be the state of New York, Texas, Florida, whatever, different municipal issuer. And then basically the sell side, those dealers stand in between us and the issuers and basically facilitate the transaction or that allocation, that marketplace. So in here basically is the market, if you will. That those financial intermediaries are participating in, basically doing the allocation between those who have capital, those who need capital, and also facilitating the pricing. This should all sound familiar. Okay, so what did we learn? Okay, well, we learned about what is the universal banking model. We learned about where we compete in the asset management space, who are the other asset managers, how we rank comparatively in size to the largest asset managers as one of the world's largest asset managers. We're not the biggest, but we're one of the biggest. And then we also looked at where we fit into the marketplace, where we are organized within those capital markets. Thanks, and I'll see you on the next module.